Yo, 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 what is up, everybody? Good afternoon. I apologize for the delay. I had some things going on. Life was happening, but you know what else is happening? Lots of red on this bubble chart behind us, guys. We talked about this yesterday. We talked about it last night on the Crypto Nightcap with FD White and with TradeFly. And then, you know, I dropped a post about this. We talked about it this morning. Guys, as the thumbnail says, you were warned, and it's playing out exactly how we all looked at it. If you're getting your bullish news from all of the other channels and not listening here, then hey, you do you, boo. But we knew this was coming, and we had it right ready to go for those shorts, looking at those longs. And right now, currently, guys, price target is sitting exactly where I thought it was going to be. Losing actually the 100 day. We're actually moving down to the 50, but we knew that once we lost this 200 day right there, we were going to be looking at coming down to the 100. We got a little bounce, it pulled back up. Now we're heading to the 50 day. Guys, it's that big target. It's right there. That's the one I'm watching. It is that right there. It is that 300 day on the golden pocket. That's going to be what we're looking for today. All of that and more with me and my co-host, FD White, right here on Trade Academy. Let's go, guys. Roll that intro. What's up, everybody? Welcome to Trade Academy. This is a show that we do Tuesdays and Thursdays, afternoon sessions. And, you know, sometimes if there's something really crazy going on, we'll jump on here also. Who knows? You never know with FD and White. We kind of just play things from the cuff and, you know, from the hip, shoot from the hip. That's what we do here. But let's go ahead and get them up here because I've got my roadie, my Trade Academy sidekick over here. What's up, FD White? How you doing, bro?
Oh, I can't complain, man. You called it. You called it, man. And you know what? Last week, you know, I was really bullish, and then after a stream, I think it was after a Thursday stream or a Tuesday stream. It was one of these streams, or you might have called me and you said, "Hey, man,
I did. I think I called you. Yo, dude.
Yeah, you called me, man, and I was like, you know, Piper, man, I don't want to hear it, man. I don't want to hear it, but it played out, man. So you know, Sniper Piper strikes again.
Guys, it's a simple matter of the trend. We hear it all. I talked about this morning. I don't know if you watched this morning, but this morning I literally pulled this chart up right here, FD, and I was like, guys, it's real simple. You hear this all the time from every YouTuber in existence, every TA specialist out there. They all talk about the trend is your friend. Why is nobody paying attention to the lower high and lower low trend? Period. Like there it is. It's clear as day. But hey, you know, it is what it is. We're gonna watch for these levels and take a look and see what's going on with the charts. And let's see where we can make some money on this. Because if you've been shorting from the value area high that I talked about, you've got a good run already in. I know some of our members in our trade group, they actually missed out on one of the shorts. So, or maybe it was one of the longs. I'm not sure. It was Buck in our Discord group. Great trader and learning more and more every day. So French Toaster said he's in a super juicy short right now. Shout out to you, man. Shout out to Melissa, BC Port Corp in here. Alexandra G. Love seeing her in here always. Best mod in the business. We got Eric Wallen who was able to join us. He said October is just starting out red. If it will end up green. We'll see, Eric. We'll see. Darren Dustin, he said, Ayo, Rugtober is upon us. Bear goggles on. 4 hour MS is bearish. I don't know what you're talking about there. Let me know, Darren. Let me know. In the chat. Dump it all. Retro Mike said. Max H said, is this a regular recurrent show in the afternoon? Max H, it's on Tuesdays and Thursdays at 4 o'clock p.m., 4 p.m. Eastern Standard Time. So let's go ahead and jump over into my chart and then have you ready to go. We're going to come back in, see what you're seeing on the chart. But here's the levels that I'm watching right here, guys. And I'm just going to put this back. We'll put it back on a 4-hour. We're taking off that scary, mean, scary 5-day that people don't like. But, hey, top-down analysis, it works. I'm just saying. Taking a look here, what we're seeing here on the current time frame, guys, 4-hour. This was the value area high that I said keep an eye on. If we can't hold this, guys, I was looking at the daily and I said if we pump past this, watch for our rejection on the quantum reactor. This is a chart prime proprietary moving average. Does a whole bunch of stuff, but what it does is it tells you if there's resistance or not. And we came within about $300, $270 from it. Front ran to the downside. We lost that value area high, coming all the way over here to the time frame of 20 September. So 20 September of last year. So this is over a year's period. I said, look, if we lose this, watch for the 200-day. I said, if we can't hold the 200-day, which is what we've been talking about forever now, is that the 200-day being underneath it is a very bad place for Bitcoin. This should not be happening. I'll show you why later on. FD, don't let me forget to show them why we should never be sitting at this point under the 200-day. Remind me about that later. I said, if we lose that, very likely heading down. Dynamic reactor, 100-day. Well, it went down there. We got a decent bounce on it. If I come over here and show you the hourly, you'll see that we came down on that level right there. Let me get the brush marks off because I covered the line. Right there, we came down and we bounced straight back up on that wick. So this line, because it's a daily SMA, it's not coming all the way over, but you'll see perfectly. Then we came up and now we're finishing it off. Right now, we're sitting on that 50-day simple moving average, and that is our next level that we're watching right now. Guys, if this doesn't hold, then on the 4-hour, we do have a quantum reactor or dynamic reactor down here. Oh, no, that would be the quantum. That's a quantum. That's a quantum reactor. That would be at about $59,000. I don't think that holds. I think the one that holds, hopefully, is the 300-day. You can see this back here previously has been great support, great resistance. You can see there we fell right through it. That was the Japanese carry trade. Let's go back here a little further in history and see how this 300 has played. Moving. 50. That was a 50 there. There's right there. Look, 300. So that's what I'm thinking is like, this is our final line of defense, guys. The troops are on the line, and this is the final push for the enemy to get breakthrough. If they make it through here, guys, then we're looking again back at that $43,000 range. That $43,000 range. What is that? Why do you say, why is that level there, Piper? That's a great question. It's called the point of control for the past 1 year of chart data. I'll show you that in a second also. But the reason that I think that this is key right here, guys, is because this is the golden pocket, the 0.66 to the 0.618 on the fibs. If you guys don't know, these fibs go back. It's trend-based fib extensions. So it has a low point to a high point to a low point, showing an up to down trend, bottom to trough to peak to trough trend. That is where this comes from, and it's 6 years old. This fib level is. It goes all the way back from 2018. Let me put this on the daily and show you. For anybody that's new that may not know this, you need to understand what we have going on here. Let's get that going. Perfect. And then let's go and find that data. So you go all the way back here to 2018, and that is the bottom point right there. That white dashed line, that is what's pulling all this. So we got 2018 bottom. Nope, we got a big white line on the chart. 2021 top, okay, and to the bottom here back in 2022, okay? So looking at this, it did a trend-based fib extension, and what does it tell us? Well, it tells us that you have your golden pocket here, right here, and your platinum pocket. Guys, remember, this goes from 2018 to 2021 to 2022, and it literally gave us the peak in March 2024 that hit the all-time high, rejecting perfectly on my 887. These fibs are solid. So when I tell you guys that the last line of defense for Bitcoin right now is going to be the fact that we're coming in on the 300-day historical strong support moving average there on the simple moving averages in line with the golden pocket. Even if we wick past it, guys, we have got to hold 56,168. That's going to be the 618. If we don't, guess what we're doing? We're setting another low, and that would be a continuation of here. Let's just go ahead and put it on here on the dreaded 5-day chart. There you go. High, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. What, guys, what is that right there? That would be another lower low. And it's a continuation of this trend, which means that once we find support there, we get into another long and we run it back up, watching for these levels for take profit. And that's how you trade this. This is how you approach when you've got the volatile markets like this, giving you bearish market structure, but you just continue to make money in it. And that's how you do it. So let's jump this over to actually, let's show that 50, 43. Let's show that first, and then we'll come over to FD White. Guys, the point of control for this entire 1 year period off of this fixed range volume profile, it's the dash red line right here. I've had this isolated off for a long time. You got a nice little play of candle prices down here, candlesticks. This level I've talked about many times. I actually think that what happens though, guys, is the golden pocket. I want that. But if it doesn't, guys, you got to expect the 50% at 48. And then if we're getting a rejection on the value area high, you typically go to the point of control. So all of this has got to stay in play in your mind at all times if you're going to survive these types of market plays. FD White, let's kick it over to you, see what you got in your chart. And then let's come back and let's just talk about what's going on with Bitcoin, Whiskey, Tango, Foxtrot. So I have no chart for you. You got to share me a chart, bro. There you go. It says you have yourself muted too. You got to unmute yourself too.
So every time, yeah, this like my second stream today, man. Sorry. So once we started the show, I said, you know what? I'm gonna just delete everything, go to my object tree, turn everything off, and just start from scratch. So, excuse me. So what I'm looking at right now, like you said, like I'm on a daily. And yeah, we just been making these lower highs, lower highs, lower highs. So we did on a daily, we did come up here. So if you're looking on a daily, it is a little bit confusing if you're looking like that. But to lose it like this, to lose this high right here, a lot of people were saying on the daily, like, oh, we took this high out here at about 65. This was the line in the sand that everybody was talking about, 65, 65, 65. But now to just slice through it like this and just lose so many key levels. And like you said, we're coming down to this green line, which is the 50-day SMA. Which may act as support. We just got to see how it reacts here. But if I'm looking at something a little bit different, if I'm looking at something, a little bit longer term of what I want to see, I have this green line here, and this coming in at about 59.5 to 60,300. So that's what I first want to see. I want to see a strong bounce. I want to see a bounce here at the 50-day SMA. But if we lose this, which we probably, well, I'm not going to say probably. It looks like we might be losing it, but it's holding so far. But if we do come down, I'll be looking at that. And then we do have a little bit of area right under 58K that I'm looking at if we do seem to lose that. And a lot of times during these emotional moves, we come down, even if this is going to hold as support, we might just come down here, get some type of wick down to this 57, mid 57 range, and then pop back up and possibly hold this 59.5, 59.8 to 60K level as support. So that's what I really want to see. That'll be a little bit more if I'm looking for a better trade. That's what I want to see. I've been starting to study like liquidity grabs and things like that, as opposed to just looking at simple support and resistance. I've been studying how the market moves. It might slice through some support, slice through some resistance, but it's just like a liquidity grab. This is what they do to come grab liquidity and then let the market settle itself and then see what happens. So right now for Bitcoin, man, we got a lot of things going on geopolitically and all around the world and here. So we just gotta and we still got so much data to come out this week. So we still gotta. I might be sitting on my hands when it comes to a longer term trade. So the last 2 weeks I was holding, take profit one, take profit two. Now with the environment, I'm back to, if it hits my TP1, I might be done with the trade. I'm just taking quick trades, and I might be starting to get in and out. But another thing, though, Piper, is we've seen a lot of things happening over these past months. A lot of times the market dumps, and then after a few days, it just rips again to the upside. So I'm a little cautious either way it goes. So right now, like I said, with the environment that we're in, if I'm in profit in the trade, above my stop or above my break even quite significantly, I'm going to just take those profits and reassess the market. But like I said, Bitcoin right now, even if I just came over here and I just pulled like a fib from this from the bottom of that move here to the top. I mean, even look at that. That just perfectly lines up with the golden pocket, the 618. If we did come down to this 57.6, 57.8 level, well, 57.8 level rather, and then we can come back up here and pop back up. So a lot of confluence coming in, but we just got to, see what happens. And I'm sitting on my hands right now when it comes to Bitcoin, and let the cards fall how they may, especially with the geopolitical things going on. Some retaliation can happen like this, and then another market could dump again. So I'm just chilling right now.
Yeah, that sounds good. Sorry, I'm doing something over here real fast with the monitor. So go ahead and pull up what other like PopCat, because I know you're watching that right now, and then I should be able to bring up what I'm looking here on my chart. I had to switch cable out real fast here. So
Yeah, PopCat is holding up. I mean, we're up almost 5% today. I think at one point we were up about 6 or 7%. So PopCat, I've been talking about PopCat for like the past 6-7 months. Over on the Piper Academy, I've been talking about it for the past 3 or 4 months. So it looks like we're holding up. Let me actually delete this. What I want to see is us to hold this level here. We have some these wicks are mean though, and this is on the daily. Let's actually zoom into the hourly so we can get a little bit more sniper's view. So we just been moseying along this little trend line right here. Looks like I really want to hold above $1. It's been like a psychological level, but I mean it's been holding up well. It's been holding up pretty well. Even if we pulled like some sort of trend line here, it's been respecting this trend line here. So a lot of people who are trading PopCat, it seems like they're just doing these. Oh, hold on, I think I see something. Give me a second.
I
Let me see. Hold
spy
on.
with
This
my
is real
little
time.
eye.
This is real time. Let me see. So this is just a little small pass. So we're basically in a nice symmetrical triangle that it's been respecting pretty much for the last 2 or 3 weeks. So if it hasn't broken down right now, then I wouldn't long it right now. I think you'll be at the tail end of the trade, but PopCat has been holding up. But usually these things do come back to correlate with the rest of the market. I don't think PopCat is going to be an outlier for like the next few days. I think it's going to come back. It had a nice significant pullback of about 10 to 12% over the weekend, I think it was. But right now it's looking like it's holding steady. But if we do, what I'll be looking at for PopCat, I mean, it's just a simple thing. Like probably, the people who are trading this aren't really that sophisticated. So what I'll be looking at is for us to possibly, break down, retest here, and then start our way back down. And I'll probably target this area here at about 80 cents if we do if we do turn very bearish on PopCat. But we can break out to the upside, but I think in order to break out to the upside, we're going to need the whole market to do what it do. So
Yeah, I
just
think.
looking at, I haven't. Go ahead. I'm sorry.
Yeah, I think the people that are going to be moving in and out of the markets right now until Bitcoin figures out what it's doing and are definitely the traders. And so they want those fast movers. PopCat, proven history of being a fast mover. So yeah, absolutely one to keep an eye on. Yep. We had a question from Seth Shepard here. He said, what's a good reentry point for Ondo, Near, and Link? If you have pulled all your profit out, you protected your wealth, dollar cost averaging can happen at any time once you've protected your wealth. Obviously, if you had bought the bottoms of 2022 and rode it all the way up, dollar cost averaging on that, you're never going to dollar cost average at a rate faster than your profit loss, right? Your unrealized profit slippage there, right? So once you take those profits, you can start dollar cost averaging in. I've started dollar cost averaging in on Solana already, Ondo, some other chain link, for two of the three that you got right there. So I've already started that because I protected my wealth. My profits are all protected right now. Now I'm just dollar cost averaging. So if you're looking at it for a buy purpose, then yeah, any time that you're ready to start going in on it, man, it's just a matter of, yeah, you took profits on all those. Good. So you can start dollar cost averaging really when you think that Bitcoin's at that level of support that you think it's at. Less than 1 year holds, yeah, you're gonna pay short-term capital gains on it. I got the same on some of my stuff also, but the money that I saved, the short-term capital gains amount is not going to be near as much as what I had already lost from March to August. So starting to pull out when I did in August, it was a couple of months early from my 1 year mark. I did not want to watch another one. I literally watched $300,000 in unrealized profits disappear. So I kept the rest of it for sure. So now it's just a matter of watching for Bitcoin to find its support. But really, if you're talking about anything on altcoins, I just paid off the IRS from last year. So that happens. If you make money, they're going to take money. That's just how it is. Florence said, please, what's a good reentry for Arrow? Help a sister. We can pull up Arrow and take a look at that, but it's gonna go again, guys. If you're looking to dollar cost average, it's really, where is Bitcoin at? Is Bitcoin hitting key support? Is it showing strength at this support level? If it is, start your DCA. If you're looking for trades on that stuff, guys, until Bitcoin changes its stance, you got to trade with Bitcoin, unless it's something just an anomaly like PopCat that went up today. That's really what it is. But we can take a look at Arrow for you. I reset almost all of my cost basis from last year. Yeah, I'm with you, bro. Seth, you are not alone, but that's okay. My plan is to make a lot of money by saving a lot of money from being lost, and then I will re-engage it. I still think that Q1 of next year, we start to see a massive shakeout if it doesn't happen sooner on the job numbers, because something that we talked about, they talked about it last night on the nightcap, was the revisions, the annual revisions from the Bureau of Labor Statistics on jobs. And we had that 817,000 jobs or whatever it was that they had revised downward. Hey, we're taking away over 750,000 jobs from the numbers that you've gotten for the past year. That only went through March of 2024. So we've got April, May, June, July, August, September, October. The next one's out in February, guys. Q1. I'm telling you, Q1 is going to be ugly. So if we're going to get bounces, it's got to happen now. I don't know how much longer they can play the shell game. It's starting to get tightened around their neck, the noose says. So they're about to be exposed. The tide is out and they are wearing no pants. So I want to show you guys a little something that I'm looking at here, and then we'll come back and we'll check out Arrow. Can you get Arrow ready for them? They're FD, and then I want to show this chart. So how do you play this? I'm looking to invest. I'm looking to get into something that's going to make some money in this current environment. Guys, I talked to you about these a while ago. Let's jump over here and take a look at these. This is, matter of fact, almost 1 year ago. I'm coming back here to UFD. Almost 1 year ago, on October 3rd, we had our debut episode of the Piper Academy show. And that is this Thursday. So this Thursday, we're going to be doing I'm guessing Piper is short. Bro, Piper's been short since August. I've been telling you guys. On October 3rd, we're going to have our 1 year anniversary. It's the birthday show here for Piper Academy. But one of the things that I told you guys about almost a year ago was these stocks here. And I said, look, if you guys are looking to play the war games, right, then you want to be watching these stocks. And you guys can see these white lines on here. These white lines are the price when I told everyone to get in. Okay. That was at $120. It's $163 now. That is Booz Allen Hamilton. There is Lockheed Martin. Look at Lockheed Martin today on their daily, guys. It's at 428. Let's go measure this off. $428 here. To its current level is 41%. We look over here. We got General Dynamics stock. We got to go way down to find that one. There we go. From the entry line to now, that's about 33%. We've got Raytheon RTX is the ticker on this. Up big time, guys. There you go. It is up about 70% from 1 year ago. We've got Northrop Grumman. These are my defense stock plays, and I think they play well. That's up 21% without the wick there. And then my Hail Mary that I said, look, I don't know how this one's going to do, but it's an Aero Systems. They design the aeronautic devices for drone systems. And so let's go check that one out. That was my Hail Mary. It's up 96%. So these were all the stocks that I talked about back then. But, hey, what if I just want to get into one basket? Well, this is what I picked up here about, let me see here. About 3 weeks ago, I picked this stock up. It is the SPDR S&P Aerospace and Defense ETF. It is called XAR. That is the ticker for it. And it is an ETF for space, aerospace, and defense contracts. If we're going to continue on, this is not a bad one to be involved in my opinion, not financial advice, but I'm glad that I picked this one up to round out because I sold off and took profits on a lot of my defense contract ones. So that's the play right there, in my opinion, if you're looking at the war side and you wanting to hedge against your losses on crypto. If this continues on, guys, those are the ones that are going to make the money. So FD, let's jump over and see what you got on your chart there, bro. You're muted.
So I just basically, my kids, man, they upstairs doing backwards flips. So I basically just drew out some simple support and resistance line. We got like a lot of these coins, man. Like I said, they respect, these macro trend lines. I'm on a daily. They respect these almost to a T. And this is kind of no different. So what I'm looking at right now, like if you wanted to like start to DCA not financial advice, I would just be looking at this, and this goes for any coin. Like it doesn't even take too much of a technical analysis background. If you can just spot simple support and resistance lines, then you can kind of figure out where to start to, DCA in if you, if we start getting pulled back. So right now, I mean, first line of defense, we're coming down. We're at 104. Yep, 104 and a half. So this is just, we can go back and see the confluence here, see all the confluence back here in April. We lose this, we'll probably go down to about 93 to 94 cent. And then if we lose that, this purple line, this is really where I would start to DCA in, or where I will go a little bit heavier into Arrow. I'm not really super hip on Arrow. I've been hearing it a lot, across crypto Twitter, across, crypto YouTube. A lot of people have been talking about it. But from just a technical standpoint, I think if we do come down to around that 70 cent area, anything under 70 cent, I think, I would start buying a little bit heavier. Right now, like this next level here down at about 94 to 95 cent, that's easily doable, today or tomorrow. Like we probably could do that today or tomorrow. But if we start to lose that area, then that'll be the time when I'm looking at, low 70s, high 60s to start the DCA in a little bit more. And then if the market goes full bear, then, anything under like 50 cent would be, a pretty good buy if you're bullish on it. And if you think the market is going to turn around at some point. Like a lot of times with these coins, I'm not sure what it does. I'm not sure if it has, pretty good fundamentals and tokenomics or whatnot. But a lot of times when we have these market pushes and then the market resets and is lows for a minute, or it doesn't do anything for a while, these coins don't really get that push that it had, a few months before. So hopefully, the market doesn't go to all hell and a lot of these altcoins can continue their ascension forward. So just be looking at those, those areas right there, just from a simple support and resistance standpoint from the daily. Now, if you're trading it, then that's a big difference. But from the looks of what you're talking about, it just seems like you're trying to DCA in. So those will be some of the levels that I would look at.
Yep, absolutely. Let's jump over here. Let's talk about the so what. The so what, right? Why 56K? Why is this a key level that I'm watching so hard? And it's really a matter of this one right here, guys. We've got this. If you guys haven't seen my chart in a while, there you go. It's the master chart. It goes all the way back to the history of Bitcoin in a Fibonacci channel. Of course, each cycle, you got your horizontal fibs pulled from lows, candle close high to candle close lows, right? And really, the key level to hold has always been right there in that platinum pocket. Really, when you get up there above it, it takes off, right? Well, this here is where we are currently on this chart. And this has been the level that I've talked about for a while. I said, this is your range. And we've got a hold inside of this range. We had a couple of fallouts, but instantly pulling back in the next week. We had even had a big wick all the way down to the 786 here at about $48,000, which we actually called. Said it a long time ago. I think that this right here, this level, this 887 on here, that is coming in at 55,971. We are pulling back down. So that's in line with that. But remember, lower lows, right? So if it breaks this, guys, really what you got to watch is about 50,000 to about 52,000. Why? Because that's going to be the diagonal channel 786. And that is literally the call that I made when we were at the bottom of why we were going to be starting to move up, because I did not think that we would ever break this 786. And then also here, I called that also. This actually was on Debate Crypto with Crusader and Keeper over there. And we were running in. I said, guys, we should not ever break the 786. If we do, we've got big problems. Well, you can see as the price came in, it started to go up instead of straight sideways. It's never broken this. This has been the level that has been key to hold. It used to be the golden pocket. Once we lost the golden pocket here for the first time ever, if I go back in history and show you, even the COVID crash caught the golden pocket perfectly, Move this all the way up here to what we're watching here. And you'll see it's now the 76, because if you lose the golden pocket, you have to assume the platinum pocket, right? If we lose this, guys, I don't know that we're not going to be heading all the way back down to the 30Ks. So I know that sounds scary, but that is a fact of life. If you look at, everyone wants to talk about trends and what Bitcoin's always done. Well, there's the entire history of Bitcoin going back to 2011 and what it's done. So I'm sorry if it doesn't match people's narrative and they want to argue it because it doesn't match their narrative. But I watch video and audio and I make sure that they sync up, and the syncing up right now in the video and audio matching up here is that we've got to hold this platinum pocket, this diagonal platinum pocket line. Another thing that I want to show you guys here, we have a Gaussian channel here. Typically, when we go into Gaussian's channels, yes, I'm looking at this on a 5-day because that's how you typically look at a Gaussian channel. But when we go into the Gaussian channel, unless we have some really bad scenario, like, for example, the COVID crash or the FTX manipulation where they were told to suppress price in the last bull run, unless that happens, you should hold the median line. Where did we come back down to in wick here? The median line. Where did we come back down to here? The median line. If we look at where that median line is, where's it at? About 56,500. So there is a whole lot of median line confluence, that $59,000, $60,000 range. We see it here. We see it right here. That's 56K. We see it when we come over here even and look at the levels on my Bitcoin chart. Where's that level at? 58 to 56K inside the golden pocket. So lots of confluence there. The one thing that does concern me is if we look at the 5-day here, and I'm sure Retro Mike Tech, who said, thanks for the financial advice, Piper. You obviously missed the intro where it says not financial advice, but hey, I'm glad that you got something out of that and you want to short to 29K. You do you, Retro Boo. The thing that's bothering me, and I'd love your feedback on this, Retro Mike, is we have the hash rate ribbon starting to curve here. And once this curves, it's a fast mover versus slow mover, we tend to go into this area here, and that's called capitulation. Let's go back and look here. We had a turned red. We got capitulation there. Oh, can I circle it? Thanks. Went red. We got capitulation. Capitulation, not typically good for miners, especially in the bull run. I am going to be watching this close to see if we get another capitulation marker as we come down to this, because then that could be an indication of more pain than what we've even seen so far coming. So Let's jump over to the duo cam. FD, thoughts on like the long terms, because there's some high time frame long term. We're talking 13 years of Bitcoin history saying these
Yeah.
levels, these fundamentals must hold, and we're seeing we're right on the edge of the cliff, and I'm about to
Very,
break.
very. Yeah, we definitely are, man. We definitely are, and I think we can't deny these facts. A lot of people are saying like this cycle is different. I heard this last cycle too. A lot of people saying this cycle is different. The cycles are off. A lot of these indicators that worked in the past, these macro indicators that worked in the past, are not working this time. We broke all time highs before the halving, and everything is off. Like until proven otherwise, you can't negate these things that have been showing. So I'm not going to negate them. I'm going to definitely take them and put them into my analysis. But right now, like we still, it's not all out panic mode, not yet. So everybody, when the market was 58K and we went up to 67K, everybody thought we was going to 100K by next Wednesday. When the market was
Mm-hmm.
67 or 66 and we dropped down to 60, whatever we're at right now, everybody thinks we're going. It doesn't work like that. It doesn't work like that. It takes a little bit of time, and I think right now like even if, let's say even right now, if you were out of the market 100%, 100%, and the market starts to turn around, you got time.
I would never do that, but yes, if that's your
But
thing, do your
yeah, yeah, yeah.
thing.
But you have time. You have time. You always have time. You
Oh
have
yeah,
more time to buy than you do to sell. So
yep.
if you're out of the market, if you're in the market and the market just dumps, you're gonna have a better chance trying to catch the market than trying to flee the market. So it's just one of them things where you got to take your personal, what you want and how you want to, play it, and go from there. Like I can't tell you because what I'm doing, I've been holding crypto since 20, a lot of these coins that I've been holding since 2020. So I'm in profit. But a lot of people who are just coming in, they're like one day they're in profit, one day they're not. One day they're in profit, one day they're not. And I was like that for some of my coins, but I did allocate more to Bitcoin. But when it comes to trading, man, it's a lot of volatility, and you just gotta, if the levels and have proper risk management, like I'm gonna say every time, then you should be okay. Like I just literally saw somebody have a 39% win rate. I literally was just looking at it. I looked at all his trades. He had like 59 trades. He had a 39% win rate, but his overall P&L was like he was like plus 11,000 or something like that from where he started. So it's risk management is the key, and with all this
It is
volatility,
absolutely.
it's possible to take
For
advantage
those
of
that
it.
don't understand that, let me explain it like this. If you're running like a 3-to-1 risk to reward, that means that like if if you're three, where your three is at, whatever percentage that is, the one, your amount of risk you're taking is 1/3 of the risk, right? And so of the reward, I mean, 1/3 is your risk level. So 33% of the time or higher, you're break even. If you're right on your trade, 33% accuracy rate or higher, you will break even or make money. You have to be less than right 33% of the time in order to not keep in the profit. So that's what he's talking about there in that 39%. This guy's let his ponies run on the times that he was right, and he was
Yeah,
only up
exactly.
6% of the time above the threshold of how often he had to be right, and he still made that much money. So yeah, risk to reward is important to know. Risk management, it's all about it. We had a request for Caspa. Let's jump over and check out that. And then we'll come back and I'll explain some economic stuff for you guys that I'm watching, just so you guys are tracking here. So looking here, you guys can see this blue line, trend line that I have running here diagonal. This is literally how I got into Caspa back when it was 3 cents and 4.5 cents. It goes all the way back to June of 2023. Okay. We are losing the 300-day. I would say that if Caspa breaks this 300-day simple moving average, let's go ahead and throw back on my fibs. We have a value area low coming in right below us right now at 13.7 cents. If we lose that, guys, I would say that we've got to take in 12.8 cents and then ultimately 11.9. be about 12 cents. That's going to be our blue. That's the last line in the sand. There's the line in the sand for CASPA right there. It's going to be your blue diagonal line at about 12 cents on the dot. So, again, it's all irrelevant or relative, I should say, to what's going on with Bitcoin. Really, that's what it's about, guys. I have pretty much quit watching any of the altcoins right now. Because I'm strictly watching Bitcoin. If I'm going to trade, I'm going to go ahead and just trade Bitcoin. That's where all my trades are at. And then once Bitcoin gives me some confirmation, then I'll look at going into the altcoins. Really, if you're looking at this from an investment perspective, there's nothing worth touching until Bitcoin has proven itself again and regained that confidence of the marketplace. We got people talking about the longshoremen in here right now, and yep, you're right. You should be worried about that. Here's why, and I don't hear anyone really talking about. I guess a couple of people have, but they're very, very smart people and very, very big shows. Okay. You've got those job numbers. We've already talked about that. There's going to be another revision. It's going to be horrible. I'm watching the job numbers this week, and there was an article this morning that I did not get to, but they were talking about that they believe Friday's job numbers will be good. Cool. If that happens, you can see this flip around pretty easily. Maybe shake off a little bit of the new war fear, right? Because it seems to get rekindled every week, right? But if not, if the job numbers are bad, then it's just a reaffirmation that the economy is on a slip and slide right now, and down it goes, right? So when you look at those job numbers with the possible revision coming in February 2025, and we continue to get bad numbers, like if we get an unemployment that says we're up 0.2%, I guarantee you it's going to scare the crap out of the markets. They're going to sell off. It doesn't matter. Doesn't matter what you think is going to happen with October and the 4-year cycle. It's all out the window. Bitcoin's an asset at the end of the day, period. Just like the S&P. Risk markets are going to sell it. If that's the case, we have bad job numbers coming in. That is a horrible thing. That is the one piece that is missing from a true recession would be job numbers, labor force weakening. It's the thing that Jerome Powell talks about every time he's given a speech. We are going to continue to look at data, continue to look at labor markets. That's what they're referring to. Okay. The other side of that coin, the flip side of that coin is inflation. And there's nothing that can impact inflation like a lack of supply in the world of meeting demand. Okay, supply and demand. That's what inflation is. When you give people billions of dollars from stimulus and they can buy whatever they want, guess what? There's not enough of it, and that causes inflation. That's how that happened. I don't care what your favorite politician says. It was because of stimulus. And then on top of that, we had lockdowns of ships sitting out in ports in California that couldn't come in because of COVID-19 lockdowns. So stimulus caused the demand. They could not meet the supply. It caused ultra inflation, right? If we have the longshoremen, that is over 50% of the goods in the U.S. They have moved about a week's worth of it, a couple of weeks that they can make it right now to other ports around to the West Coast because they're not part of that same union. But as of right now, we've got about a 2-week buffer for that to get fixed. They've got to come to an agreement right now. Doesn't look like it's going to happen. Why? Because the longshoremen want like a 65% pay raise of wages and benefits. It's a really high number, but at the end of the day, if the company want to continue making money, they're going to have to meet somewhere in there, and they don't feel that they are negotiating in good faith. So there you go. That's what's happening. But what I'm looking at is if this stretches past that 2-week period and we start to get supply chain shut down, now we have weakening job numbers and we have inflation number increase, inflationary pressure to the upside, labor force market to the downside. That's called stagflation. And if you think a recession is bad, wait till you see the impacts of a stagflation. It's not a pretty sight, and that's what I hope that we avoid. I would love to see these markets turn around, take off, things shake out to the right side up, I should say, and inflation doesn't rear its ugly head again. Job numbers start to stabilize off. But the sad truth is, we're probably going to get a revision at some point here in the near future that's even more selling pressure for the risk on, risk off markets. And if the jobs numbers are weakening and the inflation stuff is getting out of whack because of the longshoremen, and we continue to have war stuff going on, none of those look like there's an end in sight anytime soon, guys. You've got to be prepared. And this is why we preach this every single day. I know it sucks for views. The click rate does not come, trust me. No one wants to hear this. They want hopium day in, day out. But we don't sell hopium here. We sell you guys facts, the data, the truth, so that you can make informed decisions. Because when you have an information that is vital to know and you're able to understand it because it has been explained to you in a manner that makes it easy to process and digest, then it makes you able to make more informed decisions. And that is going to be my goal on this channel every single day that I stand in front of this camera. And I hope that you guys take that for what it's worth. And I appreciate all of you. So what do you got there, FD? What do you got for these people, man? Because they're tired of hearing Piper up on his soapbox preaching to the people.
It's true, man. It's true. I'll give him a little bit of hopium, man. Like, in the past, like I said, like we've had these massive downturns, these massive, news of everything going on in the Middle East. We had, the Japanese carry trade, and we bounced back. So all hope is not lost. When we do bounce back, we bounce back hard. So that is a little bit of hopium if we do start to bounce back.
And that's why I'm sitting on so much cash. Millionaires are made in recessionary markets because they were ready. So there you go.
Yeah, got to be prepared. I got Near up on my screen. If you want to come over here, I want to look. There we go. Slam dunk, man. So I got Near. This is just like we're coming down to a pivotal level, and I'm not going to deep dive into it. It's just a level that everybody, if you're into Near, I like Near a lot. It's an AI play. I think AI has been, AI has been leading the charge when it comes to altcoin sectors, and I think if the market does flip full bull, for however long it is, I think AI will do good and Near will do good. So it's a good layer one as well. So this is a big level here at about $4.40, give or take. So we're approaching it right now. We're approaching it. We did come down. We wicked down. We didn't quite touch it. Let's actually go to the 4 hour. We are starting to make our stair step down. So this is a pivotal level that I want to look at. If we lose that, then be looking at, this is where I'll buy more Near for me personally. This is where I would buy more Near around that $3.50 level. So if we lose this mustard color line here at about $4.50, $4.30, somewhere around that area, then I'll be looking at the next step down, which would be about $1 down. And that would be my buy area. Because if you look back here, we came down here at the beginning of September. This was the beginning of August. And I mean, we haven't even really tested it. But again, but we broke until we broke out of it. So in the bear market, we came up to it in December. Well, this was the bear market, came back down, and then we finally broke out in March. So this is a very pivotal level, this $4.50 if you have Near on your radar. So I think Seth was talking about Near. So I'm just looking at those two levels right there. I'll be looking at to hold that $4, like I said, and 50 cents. If we lose that, then I'll start to buy more, because I don't think my thesis is, and I keep saying this on every show that I'm on, I don't think we're going to total collapse. Like, and why do I say that? Because the election, I don't think anything is going to happen too drastically until after the election. So I'm banking on, or my thesis, my probability meter is banking on us to go up. Will we go to 100, 200K? I don't know. But am I in a position to make money if the market starts to rip again? Like, we seen what happened these past 2 weeks. Like, these altcoins, boom, 20, 30, 40, 50%. Like, if you are prepared, you can be on the sideline. Once you see the market start to shift, you can get back in. Boom, you can catch some of that move. You don't have to catch the whole move. Everybody wants to time tops, time bottoms. That's not how crypto works. That's not how trading works. That's not how investing works.
I don't want the ends of the steak. Yeah. I want that center cut filet.
You got to get center cut filet. You got to get that center cut filet, man.
It feeds me.
I know the fat. I know the fat tastes good. But you gotta get in the middle. You got to get the protein. You got to get in the middle, man. That's where all the nutrients are at. So to say.
Yeah, I just don't want to see people. I don't want to see people end up on this list right here. Past 24 hours, 170,663 traders were liquidated. Total liquidations coming in at $566 million. And the largest single liquidation order happened on Binance. It was Bitcoin, $12.6 million on a single trade. I don't want to see you guys on there. That's why we try to give you guys the truth instead of the hopium. I don't sell hopium.
So one last thing about the ports, man. They do want automation to be like not coming in. They don't want the automation to take their job. So that's the big thing. I don't want to see this port thing. Yeah. I don't want to see this port thing continue, like you said, past 2 weeks. Of course, we got the perishables and all that, but we have to keep our eye on it because it's going to affect the markets. It's going to affect what the Fed does. It's going to affect what the government does. It's going to affect everything, and everything affects the markets. I have to be in tune to. So hopefully it doesn't last too long because it would not be good. So we'll have to keep our eye out on that.
Hey, you got your tinfoil hat, man. You might need your tinfoil hat for what's coming. I'm just
I got all type of conspiracy theories, man. But we're gonna leave that. We're gonna have to make.
No, I want to say this one. I got two. One, the Democrats use this strike as the reason that the economy is in disarray as it gets closer and closer. They don't have to play defense against it anymore. They can go, well, it's because of that, period. That gives them a walk-away excuse. Deflect all day long. All of the Kool-Aid drinkers from either party are going to go, yep, it's either, yep, it is that, or no, it's not that, one way or the other. It's going to create division in mindset of who's what, where, blame, right? There's that one. But what about this one? What if they use this, all of the anti-AI politicians that have been, using their buzz terms and talking their talking points, right? What if they use this as their way to establish regulation AI policy by using it as the navigation point in their negotiations? Look, we'll put this policy out, and this will limit the ability for AI to take American jobs. And we'll use this as a negotiation point. Then they don't have to meet them all the way. They can go, look, we hear you. Go back to work, do your thing. We'll give you this pay raise, but you guys are going to be the foundation of future regulation to ensure that the American worker is protected. And how does that look for the Dems in office right now if they're the ones that put that policy out for the blue-collar worker to protect them?
They would look for like the saviors.
Dude, get your tinfoil hats out. I'm just saying.
The AARA, man, the AI Automation Robotics Act.
There you go. And then, of course, it's going to have all kinds of stuff in it that has nothing to do with AI that they're going to get also passed and approved that everyone was fighting against. So, because they'll go, hell, that thing that the other side of the aisle didn't want approved. We'll push that in there too. And then if they say that they don't want to vote for it, then we can say, look, the other side doesn't care if you lose your job to AI, because they want to vote against this bill. That's how it'll work, man. That's how they play the game over there. They just need to make it where you can only vote on a bill and there's only one thing in the bill, period. If you want to vote on something else, you make another bill and you put that in there, right? But they'll never do that. Guys, tomorrow we do have ADP employment change. I'm going to be watching this close because honestly, for this one here, this is my opinion on the ADP. It's projected on a consensus to be at 120K, forecasted to be at 90K. This is at 6:15 in the morning, guys. This ADP employment change. This is private industry employment, private business in the U.S. Added 99,000 workers to their payrolls. Okay, this is going to be the strength and the health of corporations. This is going to come out tomorrow, and right now it's forecasted to be down, but consensus is that it needs to be up. We already know that these get revised all the time to the downside. For this to not be a bad number, no matter what comes out, if it comes out at 20K, guess what? Bad number still. Why? Because they're going to revise it down and it's going to be less than this anyways. For tomorrow, what I'm watching, this number right there, 120K, that needs to be at least 150, 160,000 jobs in order for them to revise it down later and it still be a positive growth employment number. That's the thing I'm going to be watching tomorrow. Of course, we do have a couple of Feds speaking tomorrow in the morning, and then a couple in the morning also. There you go. 4 Fed speakers tomorrow with this ADP number coming out, guys. I don't know that unless these numbers come out phenomenal, like 150, 160K, I don't know how well the markets are going to receive this data coming out tomorrow. We've got job numbers all week. That is the big factor. Initial jobless claims on Thursday, Friday, non-farm payrolls coming in, and then we've got the unemployment rate. As of right now, there is one of the forecasts that actually sets our unemployment going upward, not downward, and that is another bad point too. So that's what we got time for today, man. I appreciate you joining me here, FD. I just wanted to drop that out there, let people know what the real situation is, because Bitcoin go moon when Lambo is great. If you want to ignore everything and there's nothing bad going on, but if you're ignoring all the bad and focusing on that one thing called Bitcoin, it is a beautiful, beautiful asset, but it is not immune to what's going on in the world around it. And you guys just need to be aware and be prepared. That's it. So,
yeah, I agree.
We're never going to get 100,000 subscribers, and I'm okay with that. I'm okay with that because I don't need to get viewers in order to sustain lifestyle. Do you, FD? Do you have to have viewers to sustain your lifestyle? I think we do good no matter what.
It would be nice, man. But if I
it'd be great. It would be great.
Yeah.
But if you're watching the real. If you're hearing things that don't match what's going on in the markets, you might want to ask, is the person that I'm watching every day on YouTube doing what he has to keep a channel going because it's his only lifeline for income, or is he just ignorant and doesn't understand economy? Ignorant's not a bad word. And so
what, like through all of this nonsense and all of this, anything bearish, like crypto will come out on the other side. Like it's not like it's just gonna just go to zero and then that's it and everybody pack their bags up and go home. Like it will, if we do start to go down, we do get these big dips, these big crashes like that, I think it'll just be opportunity for future runs. And I think the future run will come sooner than people think. It's just within this time frame right now, it's just very, very, very volatile and it's very, very uncertain. So just be careful.
Now, there is a scenario where this all comes okay. Job numbers don't unravel. They stay strong. They find a way to appease the port workers, right? The strike. We could continue on with 25 basis points. We have accomplished a soft landing, and then the markets start to rally back up as confidence is gained in the risk market. If that is the case, I promise you all, you have plenty of time to get your position straight. 80% of all gains are made in the last 20% of the run. So there you go. That is the parabolic run. So even if all of this just miraculously smooths out and we start to take off, markets drop like that, markets climb up walls, okay? It is a very slow grind. So you will have plenty of time. Right now is the time to just be waiting it out, really, in my opinion. I would be waiting it out. Yeah. Keep some exposure. Like Seth said, I think Seth did the right thing. He took his profits. Now he's sitting on that profit, looking to start dollar cost averaging back in with his wealth protected that he's made. So, and I think that's the right approach right now until we get some clarity on what's going on with policy.
Yeah, and what I'm doing right now, my strategy is my bags, like I always say, sorry, my bags are packed, but I'm trying to accumulate as much of that fiat as I can in order to get the dry powder stash up in order to take advantage. And I'm going to take advantage of the stock market as well. I think the stock market is very overvalued. I think if everything starts to unravel, I think the stock market is going to have tons and tons of deals. So I want to definitely diversify.
And remember, if they're offering up deals because they're down like 30%, crypto's probably down a lot, especially your altcoins. So, but I will tell you, the V-shaped recovery, that will happen in crypto first.
Oh man, if COVID didn't teach anybody anything, it should teach you
fast and fast and hard and in a
Fast and
hurry. So
furious. Yeah, definitely.
absolutely.
Definitely.
FD, I appreciate you joining me on here today, man. Hey, we're trying to, give people the knowledge, give people the information. We try to give it to you beforehand. If you guys listen, great. If you don't, maybe next time. Maybe next time. That's what we'll look for. But yeah, we're going to be back here Thursday doing this all over again. This is a 4 p.m. Show Eastern Standard Time on Tuesdays and Thursdays. And then FD, catch him tonight with FD White. Are you guys doing a half hour early? How's that working? What are you guys
Trade
doing?
fly? Me and
Trade
Fly.
fly. Sorry, yeah. Your twin.
Yeah. So we haven't established that yet, but we might be starting at 8 o'clock. But tonight I think it's gonna be 8:30, and if there's any changes, we'll probably implement it next week.
Awesome. Seth Shepard asked, "What a good stock pick." Hey, Seth, I'm actually going to do I think on Thursday. Let's bring some of our favorite stock picks to the table on Thursday, FD. And we'll talk about those because I got several ETFs that I like a lot that give you a nice broad exposure that are recessionary proof and some that are a little more risky. So we'll talk about that on Thursday for Seth. So let's bring that to the table. We will be back here tomorrow morning at 9:30 a.m. Tonight, you've got the Crypto Nightcap. Tomorrow morning, we got Good Morning Crypto with BC Port Corp and Lunar Beaches Crypto. And then the market open, guys, talking about those job numbers that we just showed you at 9:30 a.m. Eastern Standard Time right here on Piper Academy. Guys, until then, trade safe. And as always, use a stop loss.